Well, thank you very much for having me. It's always an honor to still be trading and still be here. So thank you very much for that. I've really been looking a lot at the bond market and the stock market the last few days. I'd really like to make some comments about that. Well, one thing where I think I'm different than a lot of traders, I'm a conditional trader. I look for big conditions in the market that are usually associated with major market highs and lows. So they can be fundamental and they can be technical. And then I bring in short-term timing tools. And the conditions that I love in the bond market are what the commercials are doing, the commitment to trader data. And I also have a valuation model. You can see that on the bottom pane of the chart. So we know bonds were undervalued at this level, and they were undervalued over here just before this recent big rally. And they just currently gone into the overvalued areas. They were back here, they were over here, they were in here. So I think that we're setting up a selling opportunity in bonds, especially when I look at the commercials. As you can see, they've been heavy sellers in bonds. They were here, and they called the top back here and this top. And, they got a great record of doing the right thing in the marketplace. I've been along bonds. I got out yesterday at a target. And I think we can go a little higher, but we're in the area where I want to be very careful that I think the next major move in the bond market is to the downside. We can look at my next chart. This is the one that really intrigues me the most. The green line is a small speculators. These are the average mom and pop traders in the marketplace. They're currently the most bullish they've ever been. And they have a great record. I've marked off when they have been very bullish in the past. You can see what's happened. Prices have declined. We've been in the area of a significant mark up top. So to see them this crazy bullish, and they really are, that's not a good sign. The small speculators, you can see at significant market lows, they weren't bullish at all. A great buying opportunity over here. One of the best opportunities in 2013 right here. The small speculators were not buying at all. They were net short, in fact. And I see the same thing over here. That's what sets up really significant bottoms when the public, small speculators, if you will, are just not bullish or very bearish, or in this case, they're extremely bullish in the market. And that's not good news to see that many people that bullish on the bond market. So that to me is the condition. That's the setup. So we can look and see that we have an overvaluation, that we just got in the overvalued area in bonds, and the commercials, the big guys in the marketplaces, the banks, foreign governments, institutions, their view of the market is going to go down because they have a large hedging short position on, suggests to me that we're getting close to a pretty good top on the bond market. In terms of more specific, this was my trend line target. We had a nice trend line coming up here from the first of this year into March, and we did hit that trend line. That's where we are today. In fact, we're kind of fighting at that trend line. I think that's a good place to get out, not get short yet, because I still would like to see a trend change in the market. I do a lot of work forecasting based on intermarket relationships, and it's pretty interesting what's going on now. Gold has been a pretty good forecaster of the bond market, and it says just about now we start to go down. This model's been bullish for a long time, but it started to roll over, which also suggests to me that we should start to see bonds come to the downside. I'm not short yet, though. That's the big point. I still want to see this market break a little bit, rally, and then on that rally back, I'd look to be a seller. That's the way I'm going to handle the trade in the bond market. But clearly, my vision of this market is we want to start looking and take sell signals in the bond market. There's a cycle forecast too. I use a software called Timing Solutions that does a very nice job of giving cycle forecasts. And this is the current cycle forecast for the bonds, which also says pretty much the same thing. Now, don't read this wrong. Just because we have a big down move from now until late July doesn't mean it's going to be a big down move. It just means this is selling area, buying area, selling area. If people get a real bad impression of cycles go from low to high. That doesn't necessarily the market will go from low to high. As you can see here, it didn't rally much. It was a buying area and a selling area. That's what cycles do. They don't tell us the magnitude. So don't get too carried away with the size of this decline or the next projected rally. But No, we're in the area of selling area, buying area. As you can see, the last buying areas were here, here, back over here, and over here. So when I look at that, I see also, gosh, we've got cycles. We have a valuation model. We have the small speculators wildly bullish here. And the commercials on the other side of that market, they've been sellers of this market. They're net short here. And that tells me that I definitely want to look for those sell signals in the bond market. I don't know if we've got any questions that come in, or I can continue talking.
Well, I have a question for you, Larry.
Great.
You know, you're talking obviously about the U.S. market. Do you look at bonds in foreign countries at all?
I don't know. My main interest is trading U.S. markets. I do some work on other markets, and interest rates in America have a huge impact on what happens in other countries. A good case, we have a lot of followers in Japan. And what happens to the Nikkei and some major stocks in Japan are highly correlated to interest rates in the U.S. So I look at it that way. But, you know, as a trader, I'm trading the biggest markets in the world. They're in America. I'm not going to go to a market I don't understand or have good data on. If I can't make money trading bonds and stocks in America, why would I want to go to Mexico or Brazil or India? It doesn't make any sense.
Right. And you've got all the, government issues, geopolitical concerns and things that are very difficult to get a grasp of. I completely agree with you.
Well, and as a CPA, I mean, you can recognize that in America, we may have some dodgy accounting occasionally, but I've been in these foreign countries and lectured there. I know a lot of traders there, and that's their big nemesis, is they have no idea if they can trust numbers in China. They're made up just writing off the wall sometimes. And here there are repercussions when you fudge your balance sheets. In other countries, there may or may not be. So the data here, it may be played with a little bit, but it's certainly better data to work with here than any other place in the world.
No doubt, no doubt. Any other questions, Aaron?
We did have one. You mentioned that you sold your bonds. Are you anticipating an increase in interest rates?
No, I'm expecting a decline in the bond market. So on a short to intermediate term basis, there may be no change in interest rates. But we could still have a pretty big dip in the bond market. You know, it's worth $10,000, $15,000 a contract trading, maybe $5,000 to $7,000 drop, at least 7 points in the bond market, I think could happen. Now, what's driving the bond market right now is the decline in stock prices. Once the decline in stock prices starts to abate, that's when we want to look for the sell signal in bonds to take place. These have been so reciprocal of one another. Bonds rally, stocks decline, and that's what's driving bond prices here. But I think it tells us we're close to a high. As I said, I'm not short yet in this market. I'm looking, but I need to see a trend change, because that's where technical analysis helps. We know we're in the area of a significant high. We hit the red trend line that we saw back a couple of charts. So we know we've got this, we hit today. We've pretty got a good sell setup going on here. It's just a question now of, if I want to sell short, where do I do it? I like to see the market stop for a little bit, falter a little bit. I don't want to stand in front of a freight train, and there's still a freight train to the upside. It's just I'm on the sidelines, a nice safe position, looking for selling opportunity, which I don't see yet, but I know one is coming in this market.
All right. There's a bunch of other questions, but I'm thinking maybe you should go forward, because I think some of them might get answered as we go.
Let's give it a try.
I have one other question for you, Larry.
Please.
You've obviously been talking about bonds, and it's been a safe haven, a lot of folks going in there. So one question I have, and I alluded to this at the beginning of the show, and I've talked about it here on Market Watchers Live quite a bit. But when we see yields dropping as precipitously as we've seen them, there's a couple of different possible reasons, and one of which obviously would be that the bond market is beginning to perceive economic weakness ahead, or maybe not as much economic strength as was forecast. But another thing that I've talked about a little bit on here, and I'd like to get your thoughts, is that with the dollar strengthening the way it has, do you think the movement down in the in interest rates and the movement up in bond prices is reflecting the fact that maybe bond traders are fearing deflation a little bit more with rates or with the dollar increasing and commodity prices coming down? Do you think deflation is a concern?
It could be. I think what may be the tipping point here is the massive rally that we've seen in the grain markets the last week or 2 weeks, notably led by corn. And it looks like cattle's ready for a pretty big move to the upside as well. So we may see higher prices, which of course is the opposite of what we've been seeing. And that may be at my longer term view of the dollar index is that we're real close to a significant high on the dollar index as well. I'm not short that market. But I'm certainly looking at it. So I think in terms of cycles and setups and the commitment trader report, we're not far from a pretty important top in that market as well, which may, of course, affect the bond market. But the real driving force is what we call flight to quality here. When stocks are down hard, people rush in and buy bonds. And that's been the driving force here. Typically, these moves in the bond market last 7 to 10 days. Well, we've been in this up move, this last little up move here, about 7 days. So we've got another day or two left, and then we're going to have a pullback in here.
Okay. Do you actively trade forex?
I don't trade forex. No, the commissions are too high there. I can trade the exact same things. I can take the Globex markets for, $3 round trip, and I don't have to pay pips, and I get better fills. So I'm not a forex trader. I'm going to trade the major markets where they are regulated.
Okay, sounds good. I'll let you get back to your presentation.
Okay, well, let's go take a look at forecast for the Dow Jones 30. Again, the significant point is not that we're going to have a straight down crash to July 12th, but these are the areas when we expect rallies, and these are the areas when we expect declines. We've been looking for this decline, as I publish a weekly commentary called Larry TV. You go Google it. And we've been bearish in the market. Unfortunately, it's come down as we anticipated that it would. My view is it'll continue down until about the 12th of June. I'm not going to call it the exact day, but somewhere around that end of the first week in June, the first part of the next week. Then we start to rally back up. And so there's a good buying opportunity coming for traders around the 10th, 11th of June. And the next selling point around July 20th, something like that. Then we move, and I think this is the next big move coming up around the end of September. I think we're going to have a rip-roaring move back to the upside of this market. So traders, I'm short the S&Ps, and I'd like to see them break some more cover. But I know by about the 12th of June, if I haven't covered my short yet, I've got to think about getting out of that and looking for a rally in this market up until about the middle of July. Then after that, around the 1st of September, as we get closer, we'll have a better idea where the cycles are. But I think we're going to start a pretty good up move about that time of the year in the Dow Jones Industrial, and of course in the S&Ps as well. Of course, everybody always wants a trade. So I brought a trade this has been a humdinger. One of the ways I look at the market that's unique, I think, for other people, I look at the trading days left in the month. The reason I do this is some months can have 23 trading days, some like 19 trading days if it's a leap year in February. So to normalize all these days to see what end of the month influence is in stock prices, I go back to the trading days left, and this is a phenomenal trade in June. Had you sold on the 5th or 6th day left in June in the last 20 years, that trade has always been successful as a short-term trade. So what do you mean by short-term trade? I'm going to exit this on the first profitable opening after being in the trade a day or so. I'm going to use a stop of $2,000 because this is the S&P Minis and it's a big market. But I've been taking this trade now for maybe 5-6 years. I first discovered it after a trip to Peru years ago. And there's a very strong seasonal opportunity for the S&Ps to start to go down with 5 or 6 trading days. Remember, that's trading days left. This is not the 5th of June. This is trading days left. So you have to count back in June. And with 5 or 6 trading days left in the month, look at all the green numbers here. Some have only been successful 95% of the time, right? But clearly we see there's a real bias here. So that's the next really sweet spot seasonal trade that I'm looking for coming up at the end of June. I'll go back to the forecast there. And again, in terms of where we are on a very short-term basis, I think we're going to dip down to about 2,700 in the S&Ps. Hopefully we'll go there. If we do, that's where I'm going to cover my short position and move to the sidelines. That's kind of how I see this, that we're close to a peak in the bond market. Stocks can go a little lower, but we want to be prepared after we enter the first week of June to look for a bottom in this market.
Okay, let's see. Okay, so what vehicle are you using when you short TFT?
Well, I'm a commodity trader, so I'm shorting the bond contract, the 30-year bonds. Now, there are some ETFs you can short. I think the big one is, I forget the symbol because I don't trade them. I'm a future guy. I get more bang for my buck trading futures than I do trading stocks, which is an interesting aside. You mentioned when I won the Robbins World Cup Trading Championships. If you look at the trading championships, you can trade stocks in those, you can trade forex, you can trade options, you can trade futures. And really interesting it is, year after year, the largest gains come from future traders. They don't come from forex traders or option traders or stock traders. These guys and gals trading real time, real money, have larger percentage gains in the future market. So to me, that says, wow, that's a great lesson about where the best opportunities are. Let the marketplace speak. And it's clearly said that if you're a short-term trader, your chances of making substantial gains are greater trading futures than anything else.
Okay, let's see. Where does the red cycle chart come from? This one you're looking at, the red. Where do you get the information?
Sure. I developed this myself. As I use a timing a software service called Timing Solutions. It's a wonderful cycle, allows you to run all sorts of cycles. It's complex and it doesn't automatically do it. You've got to work out which ones you think are working, and there's a lot of work to create one of these. This chart probably took 3 or 4 hours to get it to where I think it's going to be accurate. But I haven't found any other software that allows me to do cycle work as well as Timing Solutions does. And it's been a pretty good harbinger of what's going to take place in terms of time. Again, the magnitude, and that's where people get messed up with cycles. Cycles are not about magnitude. They measure time. Distance from this point to that point to the next point. They don't measure the magnitude of the move. The magnitude of the move comes from the given fundamentals of the day. And I think that's what's significant. Yeah, we've got a low coming up in June. It could be a start of a brand new bull market if, when we get there, there's really bullish data. I really want to combine all this stuff. In terms of a longer term view, clearly none of the work I've done with cycles has a great job of calling major stock market highs and lows. Helpful, but the best thing I found, what really starts bear markets, are recessions. And if you have an indicator that is good at alerting us in advance to a recession, that is a wonderful indicator to give market buy and sell signals. I'm convinced that as recessions begin, stocks go down. Until then, we're in that perpetual upward drift.
All right. Well, I've got a couple other charts I'd like for you to take a look at, but I don't want to interrupt your presentation. Do you have other slides that you wanted to show?
No, that's probably good for now. I probably have a dollar index. If you want to bring the dollar index chart on, you guys are going to have it probably showing better than I can show it. I can show you what's going on in that market. This is really significant here.
Just bring up the UUP.
Yeah,
Okay. So here is the chart of the UUP.
There's the dollar index. And notice that, oh, you're using those candlestick charts. Oh my gosh.
Is that good or bad?
If you make money with them, it's great. If you don't, it isn't good. I'm such an old school guy. I'm still using regular open, high, low, close charts because there's less confusion to look at. It doesn't matter. But the nice thing about what you guys have, you can change those to open, high, low, close just like that in a heartbeat, right? That's really nice.
Yeah.
So notice that while stocks have made a lower low today, bonds have made a higher high today, and they've been, the dollar index and bonds have kind of followed. We haven't made a higher high in the dollar index. In fact, we've rallied back into that same area where we've been about 3 times now. So a very short-term trend line coming right off the lowest low of the last 3 days coming up here. We penetrate that, it would suggest to me this market is going to move back to the downside.
Mhm.
It looks like we could be, to me, in the area of a high based on some cycle studies that I do. You can look at some measures of accumulation in this market as well. And I think there's a nice short-term trading opportunity that if tomorrow we were to take out today's low, we're going to be pretty close to a sell signal in this market. That would certainly be a short-term trend change.
Okay.
People
Well,
might want to look at that.
the reason I asked you about the Russell 2000 earlier, I'll bring up this chart using the seasonality tool here at StockCharts. You can compare one index against another index and then scroll back a number of years. So I can go back 20 years, and you can see as we go into June, over the last 20 years, the Russell 2000 has outperformed the S&P 500 84% of Junes, and to the tune of an average of 1.6%. So this is the best month of relative performance, at least over the last 2 decades. This has been the best month of relative performance for small caps. And when I pulled up the index, the relative index of the Russell 2000 versus the S&P 500, we've been declining for almost a year now. And over the last 5 years, we really haven't been below this level much. And I could stretch this chart out. We could go back and look 10 years. And, for the most part, when you go back and you look, when we get to this level, this is about an area where we've started to see the Russell 2000 small caps outperform. And when we go to seasonality, it typically happens during the month of June. And so that was one of the reasons that led me to that question about whether or not.
That's great. And follow up on that, Tom, if we look at that, I know we've got that seasonal sell signal in the S&P coming, the 6th trading day left of June, right?
Yep.
Which tells me I don't want to take it on the Russell because it's comparatively stronger in June. So yeah. I know which one of the vehicles I want to focus my attention on, right? See that?
Yep. But if it doesn't work, I don't mention it again on a future show, please.
That's the art of trading, is sometimes this stuff does work and sometimes it doesn't. And even when you get into trading, it's one thing, okay, here's what's going to happen in the market. You still have to manage your trades. I mean, that to me is the success of being a trader. All these people are trying to predict the markets with this or that or GAN or astrology or whatever it is. Doesn't matter. You're still in the trade. You have to figure out your entry, your exit, and the management of the trade. That's what makes trading successful. That's why I've been able to make a fortune trading, managing the trades. Like everybody, sometimes I'm right and wrong, but you have to be able to manage the winning trades and the losing trades. That's what makes a huge difference. That's what being a good trader about. There's no magic secret of this business of trading other than money management and managing your own trades.
And I would add discipline. I know on that one trading schedule that you showed earlier with the number of days left in June, you had $2,000 as the max loss, from what I recall, correct?
Right, absolutely.
So if you're wrong, there was a fellow that I used to do radio. He would come on our show from time to time, and he was a money manager for Wachovia, one of the better ones with Wachovia. Mm-hmm. And he always had a saying that, I don't mind being wrong. I just don't want to be wrong for long. And so I think that kind of speaks to that point, having your stops in play, knowing that you're not going to be right every time and accepting it. And I think, your son, who wrote a book about the mental aspect of trading and what makes a good trader. I mean, I'd probably love to have him on the show sometime and talk about that. But I think that's a big part of it, because our human psyche is that we want to be proven correct. And when you take a loss, you're basically admitting failure. But it saves you a lot of money in the long run.
Jason's work was really interesting. He was trained as a psychiatrist at Johns Hopkins, and he did the first serious work that researched just successful traders. In the past, these guys like my son researched losing traders. Well, Jason's work was on winning traders, and he found there's a couple of things all these winning traders had in common. And one of them is not quite what you would expect, but because I've seen so many traders blow up, it was very real to me. And is that most of these traders have, let's call it a low self-image. They're not yelling and shouting and screaming and all that type of stuff like you see in the movies. They're like, well, I don't know what's going to happen. I have a friend who's manages billions of dollars. And if I ask him about the markets, well, I don't really know. I mean, he's like, and that's, I think, what makes them successful. Because of that, they're not plungers. Whereas the guys I know from the pit days where you're yelling and shouting and screaming and they knew everything about the markets, they were plungers. They all blew up. So yeah, what you reference is the safety of this, and again, managing your trades, is how you approach it. You've got to have the discipline to it. You have to say, well, I guess I'm wrong here, and get out of the trade. And you can be wrong. We have a friend that lived here in the Virgin Islands with us, was a floor trader in the Pacific Coast Stock Exchange. He said he'd have 600 or 700 trades a day, and he never knew which ones would be profitable. But if he managed his trades, he made money. I thought, wow, you never really know where your big winning trades are going to come from. You might have an idea, but you don't absolutely know for sure. So it's trade management and not being too impressed with your own intelligence or lack thereof. Those are big parts of it.
How did we're going to need to run on here or leave just a minute, but I did want to ask you, when you first got started in this, how did you learn? I mean, everybody has to learn from their mistakes. Did you journalize your trades? Did you go back and summarize, trying to figure out what worked and what didn't work? How did you get started in this?
Well, I had lots of opportunities. What didn't work, that's for sure, because I had a lot of what didn't work when I started trading. But I met two people that were really helpful to me. One is Gil Holler, who wrote a book called The Holler Theory. And Gil became a friend of mine. He was a very long-term, momentum-driven guy and just genuinely helpful. I don't know that I learned how to make money from Gil, but just the support that he gave me. And then a guy named Bill Meehan, who had been a member of the Board of Trade, came to me. A couple guys that now run, I think, the 3 largest commodity funds in the world were mentored by him. And Bill came to me and was looking for a job. And I said, yeah, sure, I'll hire you. You can help me, teach me about the markets. And Bill taught me about the commitment to trader reports, seasonality in the markets, premiums in the markets, spreads, the basics of the markets. And that was just really helpful. I had a good idea from technical stuff, reading Joe Granville's book and, knocking around with Pete Harlan and the McClellan oscillator guys and all that. We all were generating the same stuff back then. But to have that fundamental perspective from Bill Meehan was just massive to help me in the markets.
Very cool. Well, this has been a tremendous presentation. I can tell you I've really enjoyed it. I'm sure our audience has as well. We definitely want to get you back, Larry, sometime. So can we get that on your schedule?
Well, I absolutely look forward to it. I know we've always fun to do this. Come out from just looking at my own charts to talk to other people outside the world. It's wonderful. I enjoyed it very much. And thank you. You guys have been great today.
Thank you.
Well, before you go, a lot of people have asked, where they can get a hold of your latest and greatest information. Do you have a newsletter? Was the website up to date? Would you recommend?
Sure. The website is ireallytrade.com. And I do my weekly market commentary called Larry TV. So we show charts and talk about it and give the reasons why. It's not just enough to say, here's a trade. I really want to teach people and say, this is why I'm long bonds, why I was long bonds a while ago, or why I'm going to do whatever I'm going to do. It's very educational. It's not just buy here, sell there. And I do that once a week. And there's courses and stuff there. And people can read about some of my students have done real well. We've got Traders Hall of Fame there. It's kind of interesting. They can read more about my Williams %R index as well, the history of it and stuff. So a lot of free stuff there.
That's another thing we didn't even have really a chance to get into, but I'd love to maybe on your next visit talk a little bit about how you developed that indicator. I know it's very similar to the fast stochastic, but you have different scaling on it, and maybe that's a topic for another a visit.
I would love to divulge the real story behind stochastics and %R next time. Absolutely.
All right. Well, we'd love to hear it for sure. So again, thank you so much for stopping by.
My pleasure. Good luck and good trading to everybody.
All right. Thanks, Larry.
Thank you.
Thank you.